Welcome to Realcast, the weekly roundup of the real asset markets. My name is Richard Betts, and I'm joined this week by Ron van Bluis, Antonio Gil Mercado, and Paul Strohm and Nicole Dines. We're picking up a little bit on some of the sort of key events that have been around Europe. So let's start with you, Ron, in terms of Provada there in the Dutch markets.
Yeah, well, I think after a brilliant Expo Real, it was time to have a Dutch, well, let's call it a party, because I think after the lockdown, Dutch real estate professionals were very keen to meet each other. It was absolutely crowded, 3 days long. So a big thumbs up for the team of Peter Schreuter. And it was actually driven by sustainability. I think it was one of the main topics. So ESG, impact investing, the raising awareness of the impact of the built environment. That was really one of the topics, both on a residential sector, offices, but also, for example, the senior housing and healthcare market. And it was really incredible to see also the crossovers between the real estate markets, infrastructure, but for example, also mobility. And I think that's really also the future, where we see much more crossovers between different asset types, and also to gain knowledge about how we can make the real estate sector future-proof.
I think it's been really interesting to see that growth in terms of the focus there, and particularly that focus on impact in the Dutch market, which of course has been a leading kind of player in both impact and ESG over a number of years. And Antonio, there was obviously a physical event and then also an online event focused on the Portuguese markets. Give us your flavour of that and also your sense of where we are in the Iberian markets at the moment.
Portugal Real Estate Summit was a very big success. 300 people attending. It overcame our better expectations. The people in Iberia were really keen to see each other and to return to business. One very interesting trend that is residential prices are picking up. They stopped to growth during the pandemic. We are almost 9% up during this year. And this is in fact because people didn't need to pay their mortgage. People is doing an extra saving because it was less travel, less restaurant spending, and the saving of the mortgage, because people was not due to pay mortgages during the pandemic time. So now people, the ones didn't lose a job, that was the vast majority, in fact, have an extra savings. And people realize that their homes could be improved or even moved. So residential market in Portugal is booming, a little bit the same in Spain. In Spain, with a very big push on build to rent, and market being very active on that side. And that good move spreads over the real estate market. So very interesting times, both in Portugal and both in Spain. And one of the major news of the Iberian property this week was that one of the main Portuguese open-ended funds, Square Asset Management, with a debut in Spain with a buy of 20 million euros. So very interesting action.
Yeah, no, that's interesting that deal in Spain, particularly in retail, showing a little bit of confidence there. And also the residential side, I think, is a huge story across Europe. And you were following some of those online sessions as well, Nicole.
Yes, I thought there was some as Antonio was saying, great interest, renewal of interest in the market after the lull of the pandemic. But I was particularly interested in zooming in on particular sectors. For example, Francisco Costa Horta of CBRE Portugal was talking about the renewed interest of investors in particular alternative sectors in Portugal that maybe they wouldn't have thought about until now. For example, healthcare, which is a very small market now, but it's got huge potential for growth. And CBRE predicts that will be a 50% increase in investments volumes this year to over 200 million euros. And another sector he highlighted was data centers, which again have been big news in Europe, but are virtually non-existent. There's only one in Portugal, but again, a very fast-growing market. There are already projects to develop 9 underway, which will completely change the landscape. So early investors in that sector are set to reap rewards. In a more traditional sector, which is the office sector, again, Portugal is very interesting. And Joana Rodriguez of Savills pointed out this interesting trend, especially in Lisbon, but in Porto as well, of a sort of dual market, with the traditional CBD office market, the prime market, going really well with a lot of interest and a lot of transactions, but also a new hybrid way of working, as we've seen elsewhere in Europe, especially technology companies like Siemens and Microsoft are leading the way in establishing little office hubs in residential locations to make it easier for employees to, not have to travel into the CBD every day, but still feel they are in an office environment and can exchange ideas and all the benefits that we know the office can bring. So it's a very interesting dual strategy that is happening in Lisbon. And I think it's actually, Lisbon maybe is not following a trend, but maybe setting a trend. Going to Italy, there were 2 interesting pieces of news this week, I thought. One was some new data on the retail market. The interesting data that came out this week is that the market is picking up again, and then the trend is positive. And between 21 this year and 2023, there is a pipeline again of 10 new shopping centers. So obviously the market believes that it's going to pick up again. And the rents, funnily enough, are completely unchanged even throughout the crisis. They have not gone down. And again, not surprising, the F&B are doing extremely well, and fashion and beauty are doing less well. But the trend, as I was saying, is positive. Another news from Milan is that Colliers Italy, which was established back in 1996, has been taken over by the mother company, as it were, by what used to be Colliers International, which is now known as Colliers. The 2 founders of Colliers Italy will remain as minority shareholders, but the Colliers will take over, which is they described as a sign of their belief in the strength and the future and the prospects of the Italian market.
Yes, interesting to see that. Paul, what have you been tracking?
Yes, also Colliers figures again. In the week that COP26 kicks off, Colliers has quantified the cost of reining in the built environment's carbon emissions. The fact that buildings collectively account for 40% of direct and indirect carbon emissions is now widely known and accepted. What may be a surprise is that the bill for retrofitting buildings to comply with ESG requirements could be 7 trillion euros in Europe alone, according to Colliers, which has quantified it for a report titled ESG, a tipping point. Colliers' Damien Harrington says that spread over the next 25 years, it equates to the typical annual volume of investment activity in Europe, which is around 300 billion euros. Obviously, how and who pays it, investors, owners, governments, or society as a whole, remains to be seen. The report also states that the global drive for sustainability is creating uncertainty in the property investment market, and that there's an urgent need for policymakers to agree on pragmatic, actionable targets. Another problem that Colliers highlights is that there's no single set of reporting frameworks accepted as the worldwide benchmark for ESG performance, which makes predicting future requirements and liabilities challenging for real estate investors. This week also saw confirmation of a story that was mentioned in Realcast a few weeks ago. Inca Investment, part of the group that owns IKEA, has confirmed that it's acquired the iconic Topshop building on Oxford Circus in London's West End, and at a price of £378 million, that's about 446 million euros, has been agreed. It'll be the home of IKEA's smaller format city centre stores. Finally, from me, this was the UK government's budget week, which was eagerly awaited by the UK public and property market. One comment was from Jace Terrell, Chief Executive of the new West End company, which represents businesses in the West End of London, said it's encouraging to see the Chancellor finally act upon the need to reform business rates. But he said that while a 50% discount for retail and hospitality sectors will help some struggling high street businesses, the discount's capped at £110,000. So it means little to city centre businesses, particularly for a store in London's West End. It'll mean less than a 1% cut in their business rates bill. Sunak also confirmed investment of 11.5 billion in the affordable homes programme in England from 2021 to 2026, a measure designed to help build up to 180,000 new affordable homes, 65% of which will be outside London.
That affordability side will for certain be one of the topics that there'll be at COP, as well as climate change, and we'll be expecting that to be a huge topic, I think, and we'll be reporting on that, as well as obviously we'll be having an event in Glasgow live at COP on the 11th of November, which is the day focused on cities, regions and the built environment. Thanks very much, Antonio, Ron, Paul and Nicole. Thank you for joining us, and look forward to seeing you next week for our regular roundup of the Week in Real Assets.